A record share of the world's population is voting this year. However, the presidential elections in the US will have to ultimately say on how the global economy will develop. With over 60 countries holding elections, the world is set to witness a surge in democratic participation that will dramatically shake up the economic landscape. According to Goldman Sachs research, election years typically bring about substantial increases in government spending, relaxed central banking policies, and heightened economic uncertainty. Joseph Briggs, a Goldman Sachs economist, warns that these elections are set to be a critical macro story, with major events including the US presidential election and the EU parliamentary elections. The impact of elections on economic growth, mainly through fiscal and monetary easing, is expected to be significant. So stay tuned for potential policy shifts post-election, which could have far-reaching implications, especially in the US. The markets are abuzz with anticipation of a historic Biden-Trump rematch, the first of its kind since 1892. This electrifying showdown pits the current president against his former rival. With Biden in power, continuity is expected. However, a potential Trump victory has investors on edge. In 2016, the S&P 500 surged 6% post-Trump's win and soared 57% during his term. Sensitive to economic shifts, cyclical stocks thrived under both Trump and Biden. Trump's unpredictable policies suggest a second term filled with volatility. Trump's win could boost sectors like defense and lower taxes. The Federal Reserve is another concern. Trump has vowed not to reappoint Jay Powell, raising worries about Fed independence. But how exactly can the US president elections change the world economy? The first thing we must remember is that the outcome of a US presidential election often leads to significant changes in fiscal and monetary policies. Different administrations prioritize different economic strategies, such as varying levels of government spending, taxation, and regulation. These policy shifts can influence global markets, especially as the US economy is closely intertwined with the global economy. For instance, increased government spending or tax cuts can stimulate economic growth, affecting trade partners and international supply chains. Secondly, presidential elections can bring about changes in trade policies and international relations. Different candidates may have distinct approaches to trade agreements, tariffs, and diplomatic ties, which can impact global trade flows and economic stability. For example, a president favoring protectionist policies might implement tariffs that could lead to trade wars, affecting global markets and economies dependent on exports to the US. Lastly, the uncertainty surrounding US presidential elections can affect investor confidence and market sentiment worldwide. Financial markets often react to election outcomes based on anticipated economic policies and their potential impacts. This can lead to volatility in stock markets, currency exchange rates, and investment flows. Additionally, the Economic Policy Uncertainty Index shows that election-related uncertainty can slow down investment growth, not just in the US, but also in economies linked to it. As we already know, the seismic shock of the 2016 electoral wave sent shockwaves reverberating through the global economy, triggering a trade war under the newly elected President Trump. However, the stakes are even higher this year, with a multitude of elections set against a backdrop of soaring rates, mounting deficits, increasing fragmentation, and geopolitical turmoil. If Biden clinches re-election, his tough stance on China will persist, restricting its access to vital technology while advocating for the relocation of manufacturing back to the US or neighboring regions. Tariffs are poised to remain under a Biden administration, but the specter of intensified trade restrictions looms ominously in a potential second term for Trump. In fact, Trump's recent musings about imposing a staggering 60% tariff on all Chinese imports and a 10% tariff on other imports signal a profound enduring shift in U.S. policy, unsettling nations worldwide and forcing them to reassess their own strategies. Analysts predict this could increase retaliatory tariffs and accelerate trade conflicts, potentially becoming the new normal. Prospect of heightened discord among traditional allies is also on the horizon. Trump's recent remarks have cast doubt on his commitment to NATO, prompting concerns about the future of the US-Europe relations. Furthermore, his espousal of an isolationist policy and his provocations towards European nations could cast a shadow over global growth and escalate inflationary pressures with the International Monetary Fund, warning that international trade restrictions could siphon a colossal $7 trillion from global economic output in the long term. Against this backdrop, the pivotal question arises: which countries will align with the China-Russia axis, and which will gravitate towards the US and the West? The uncertainty and high stakes make it abundantly clear. These elections matter more than ever. As Sarah Ketterer, a prominent value inspector and head of Causeway Capital Management, poignantly remarks, the geopolitical landscape is teetering on the brink of a transformative shift, and the impact of these elections will resonate far and wide. But what about Latin America or East Asia? As the 2024 US presidential election nears, investors are on edge, anticipating Donald Trump's potential return and impact on Latin American markets. Trump's previous term saw strained relations with the region, marked by contentious vaccine distribution and conditional financial aid tied to stricter migration policies in Central America. Mexico, a key indicator for U.S. policy in emerging markets, is already facing a 6% drop in the peso this year, worsening by domestic political uncertainties. Analysts predict trade will dominate U.S.-Mexico relations, with Trump potentially leveraging the USMCA trade deal review to push for higher tariffs and more U.S. manufacturing investment. Trump's focus on border controls could threaten remittance growth to Mexico. Latin American leaders like El Salvador Nayib Bukele and Argentina's Javier Milei, both Trump supporters, are seeking IMF support. Bukele's recent bond offer depends on securing a new IMF program or a credit rating boost, betting on Trump's potential influence. Venezuela's future also hinges on the U.S. election, with its upcoming presidential election crucial for rejoining the international community. Trump previously intensified sanctions against Venezuela, while Biden aimed to reestablish ties. The next U.S. president will play a vital role in any debt restructuring for Venezuela, which owes at least $60 billion in sovereign bonds. Relationships with Cuba and Nicaragua are expected to strain further under the Trump administration. The global financial landscape is poised for significant shifts depending on the U.S. election outcome, with Latin America at the forefront of potential changes. In 2023, U.S. foreign policy in Asia thrived under Biden, bolstering alliances and normalizing relations with China. The administration upgraded ties with Indonesia, Vietnam, India, while reinforcing its presence in the Pacific Islands with partners like Australia. It adeptly navigated tensions in the Taiwan Strait, the South China Sea, and the Korean Peninsula. The crowning achievement was the Camp David summit, where Biden, Japanese Prime Minister Kishida, and South Korean President Yoon deepened trilateral cooperation. The U.S. also stabilized its relations with China, reopening diplomatic channels and resuming high-level military communication. However, sustaining this momentum in 2024 presents challenges. Major summits will be hosted outside Asia, and Biden's re-election campaign might limit his engagement in the region. External conflicts like the Ukraine war and potential escalations in the Israel-Hamas conflict could strain U.S. focus and credibility in Asia. Domestically, rising isolationism and ideological polarization pose significant hurdles. The lack of a robust trade agenda for Asia remains a critical weakness, with no expected bold moves in the rest of 2024. But that's not all. In fact, how the U.S. elections will impact the AI is one of the most critical issues now, as artificial intelligence is the future of the worldwide economy. Thus, as the 2024 U.S. presidential election looms, the global technology sector braces for dramatic shifts depending on who wins. If Donald Trump clinches victory, expect a stark departure from Biden's policies. Trump is likely to intensify concerns over U.S. reliance on Chinese tech imports while downplaying domestic antitrust issues. However, a divided Congress will hinder sweeping legislative changes, leaving Trump to rely on executive orders subject to judicial and state-level checks. Under a re-elected Joe Biden, continuity reigns in tech policy. The Biden administration would likely continue investing in infrastructure like broadband and semiconductor manufacturing, leveraging bipartisan support seen in the 2022 CHIPS and Science Act. While Biden aims to strengthen regulation, a divided Congress will hamper comprehensive laws on AI or federal privacy, limiting actions to executive orders and existing legal frameworks. The administration would persist in curbing China's tech advancements, seeking multilateral support. Trump's approach would diverge sharply, favoring unilateral transactional tactics, including proposed tariffs on all imports, straining alliances, and impacting U.S. tech firms like Apple. His regulatory stance remains ambiguous, potentially less scrutiny overall, but ad hoc targeting of perceived adversaries. Immigration policies would tighten, complicating tech talent recruitment, and his stance on AI remains undefined. Regardless of who wins, legislative gridlock looms with a divided Congress, shifting the battleground to the judiciary and individual states. Even during Democratic control, tech regulation proposals on antitrust and privacy failed. The judiciary, included the Supreme Court, and proactive states like California will fill the legislative void, as exemplified by ongoing debates over Section 230 of the Telecommunications Act of 1996, which shields tech companies from liability over user content. Thus, the world should be prepared for both scenarios of the U.S. presidential elections, as their outcome promises to bring different effects on the world economy. However, regardless of who wins, keeping a positive attitude toward future economic prospects will always help.